What's going on, everyone? Hootmoney here with another video for you guys today. Today, we're going to be talking about TRKA Media Group, or TRKA, indoor sunglasses. Engage. The first time we mentioned this stock was in VIP trade alerts at 38 cents, and since then it has run over 210% to highs. I still think this is a very good deal, obviously, or I would not be making a video on it. And if you guys wanted to check out Hootmoney trade alerts, it's that first link in the description down below. But with that being said, I've got loads of due diligence to bring for you guys today. I could not be more excited, and let's get right into it. All right, my friends, so TRKA Media Group has recently announced loads of bullish catalysts for the stock, most notably being the revenue has increased 307% quarter over quarter to $15.7 million. If we annualize that revenue, it brings us up to about $62 million per year in revenue. Currently, TRKA Media is going for about $65 million in revenue, bringing it to about a 1-to-1 price to sales ratio. TRKA Media has also completely rebranded their C-suite, appointing Sid Toama as Chief Executive Officer and Erica Nadrich as the Chief Financial Officer. The company is also very close to profitability. Analysts are also expecting an average annual growth rate of 114% as well, which is an extremely high growth rate for a company. To put it into perspective, a 30% compound annual growth rate is considered a very high growth rate for a growing company, and TRKA Media Group has 114%. Just to look at a timeline of events here for TRKA Media Group, you can see over here we have highlighted March price action. This is where a majority of the short interest on this stock has been accumulated. Since then, the stock has absolutely plummeted, seeing lows of 33 cents, down over 66% from that value right there. And if we're going all the way back to IPO, it's down even more. Recently, we saw a resurgence of share price in this region where TRKA Media Group has rallied over 200% on all of the bullish catalysts that we have been going over so far, such as the new CEO, CFO, and then obviously that 300% quarter over quarter growth rate. Well, my friends, since we saw the stock fall off an absolute cliff since March from around $1 a share to 33 cents per share, there has been loads of accumulation. You guys can see right here in May and June of 2022, there has been absolutely absurd accumulation. Now keep in mind, it does say June 2022, but this accumulation that you see, this huge wick, that is from the month of May. Institutions that added new positions did so around $1.11 here, $1.11 here, $1.11 right here, $1.11 right here, $1.11 right here, and then $1.11 right here. There's also the insider Peter Coates, who is a 10% owner of the company, accumulating more shares in April, and his average cost was 68 cents and 71 cents. So even after the stock price has rallied over 200%, TRKA is still sitting below that value that institutions accumulated for, and obviously institutions were loading the boat at these values. We also saw the 10% owner accumulate a stake around 70 cents per share. So needless to say, when we spotted this play in Hootmoney trade alerts at 38 cents, it was a fundamental steal, and the market has agreed with us. Obviously, this stock has been running greatly, but here I'm going to explain why this is still an amazing play and the short squeeze thesis. I'd like to quickly thank the sponsor of today's video, which is Moomoo, a licensed FINRA broker that does absolutely zero payment for order flow. They're running this promotion where you can get 5 free stocks up to $2,500 each. If you deposit $100, you will receive a free share of Lucid as well, and 2 free stocks valued up to $5,000 in total value. It's an absolutely insane brokerage promotion. They also give away free level 2 data for US stocks, $0 in commission, so it's free trading and they're a licensed member of FINRA and SIPC. The free share of Lucid, which currently goes for $20 per share with a $100 deposit, that only lasts through the month of June, so act quickly. The link to sign up for Moomoo is below in the description and pinned comment section. All right, so moving back to the month of March, where we did in fact see the sell-off come out of it, we have to see what actually happened during March. This is where the company actually registered a new S1, and there are now March 2022 warrants and March 2022 Series E convertible preferred stock, which could in fact dilute the flow. Now, a lot of people love to jump ship when they hear dilution, but you have to consider how this is actually a bullish thing, because first and foremost, the warrants were priced 100% higher than what the stock was trading at. So with $2 warrants and the stock trading in a range close to the $1 per share mark, there was a 100% premium on those warrants. This means that the company was able to raise money from a lender, and the only way that the lender can make money off of these warrants is by the stock actually going past $2 per share, which would imply 100% upside from the price level of $1 per share. Now, we're back at $1 per share right now. What's the difference between right here and right now? Well, short sellers actually loaded up on the stock back here on the announcement of this news. Short sellers were well in the green for a while. However, with the new transformation of the company, the stock price is right back to where it was before. So instead of having short sellers in a confident position like they were in right here and even throughout this downtrend, now we are in a position where short sellers are close to break even and even suffering losses on their short investments. And this is all while the company is releasing all of this bullish news, such as a new C-suite and 300% quarter-over-quarter revenue growth, alongside with achieving potential operating profitability in 2023. So there's a lot more reasons for short sellers to be absolutely sweating their mother flipping balls off right now than it was back here in March. And that's the pristine difference right here, my friends, because these $2 warrants are still priced 100% higher than what the stock price is trading at right now. There's overall a very, very, very low risk of dilution on this stock, and there's absolutely no ammo for short sellers to take it down even more. And we can show that right here in this Fintel spreadsheet. As you guys can see, this was last updated 10 minutes ago. Fintel has reported that there are 0 shares available to be shorted, but it was last reported last Monday. So over a week and a half ago now on 5/23. So it's pretty impossible to short this thing. I even reached out to Fintel myself, and they told me that this is because there are literally no shares. Like, short sellers can't short this stock. That's what Fintel told me. I begged them. I asked them each and every single day last week to give me an explanation. Why are the numbers not updating? Why is this not updating? Why is the borrow rate still stagnant? And they said it's because this stock is impossible to be borrowed. Now, we know that short sellers bend the rules of the game. They're still going to be able to borrow and short the stock. They might already have shares on loan. Market makers will have short exemptions as well. So there are still some wiggle room for shorts to actually short. But let's look at this short volume ratio over the past 2 weeks. On 5/17 or May 17th, it was at a hot 64% short volume. Since then, we have seen it decrease, going down to 59%, 57% right here, 55%, 52%. And as of yesterday, they marked 46% short volume on TRKA, going down almost 20% from what it was 2 weeks ago. So what we know is that there are literally 0 shares available to be borrowed, 0 new shares available to be short. What's being shorted right now is either a naked short, failure to deliver, short exemption type of short, or those shares are already on loan and someone already has access to those shares to short. But overall, we've been seeing this short volume come down very, very very, very quickly, right, over the past 2 weeks. And it just shows that the ammo of these short sellers, whatever speck of ammo that they have left, they no longer have it. And it's coming down very, 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 very quickly. My quickest summary on what exactly a short exempt is that a market maker doesn't have the liquidity to fulfill an order. So despite normal short sale rules, they are exempted from those rules in order to fulfill the requirements as a market maker. They have to be able to make the market. So sometimes they will do that by naked shorting. And that's how I see these short exemptions. And these have been picking up very, very rapidly over the past few days. And we saw a high of 26,000 short exemptions on May 27th, which was last Friday. Market makers have 6 days to cover these short exemptions, or else they'll be marked as a failure to deliver. They'll have to pay an enormous fine. Speaking of failure to delivers, the new failure to deliver data from the first half of May will be due today. We don't yet have it here on Fintel. The SEC was actually late with delivering that data last time. So we'll see what happens today, but we'll be on the lookout for that as well. Follow me on Twitter at HootmoneyYT. I will be posting the failure to deliver data as soon as I get my hands on it. All right, so looking at the Ortex data, the first thing you'll notice is that since the last video, the cost to borrow has been heating up pretty significantly, now at 131%. Utilization is still at 100%. This is obviously differing from what Fintel is stating, as Fintel has not been able to update their borrow rates, as you guys can see right here, because they mentioned that there are no shares available to be shorted. But as you guys can see, Ortex lists it at a 131% cost to borrow. As you guys can see, if we just do on loan new, which are newly borrowed shares on the chart, it did go up significantly last Monday, May 23rd, which was the last day that we actually got an update here on Fintel. But since that day, it has not been too many shares at all being put on loan, and it's pretty much fully utilized to the max. It's super hard to short this thing at this point. As you guys can see, utilization has been at 100% since the middle of March, and it has not really been dipped under 100%, even though there obviously still were some shares that were being borrowed. Short sellers will always pull some shares out of their ass. But 100% utilization does hold true. And as you guys can see, cost to borrow was also roughly around 55% before it really started to dip in April. Since then, we really got a spike up in cost to borrow once we started seeing all of this bullish news. If you are a lender of TRKA and they all of a sudden start saying all of this bullish news each and every single day, you're going to want to pull your shares back from short sellers, and it's going to end up having a spike up as the result in cost to borrow. And you can see it goes from 58% right there up to 79%, now being listed at 131%, and Fintel is pretty much listing it at, well, nothing, because they're saying that you can't even borrow this thing. Days to cover, this is huge. The 3-month days to cover on loan is 4.91 days. So that would mean if every single short seller wanted to cover their stock, it would take them a total of 5 days to do so. Now, usually what happens is when you get volume spikes, days to cover starts coming down. But we can look at this. Days to cover 1 week based off of the estimated short interest is still over 1 days to cover. This is accounting for the average volume over the past week, and it still takes over a single day to cover. Anything over 1 days to cover is pretty good. On most of short squeeze stocks, once they start going up, once they start catching some volume, that's when their days to cover plummets, and there's plenty of liquidity for short sellers to cover, and there's other games that can be played. Right here, we are still seeing a pretty illiquid stock that takes over 1 day to cover. Looking at the failure to delivers visualized on the chart, there were loads of failure to delivers during the entire month of April. Those would have had to been covered T plus 35. Honestly, that's catching up to them pretty much right now as we speak. And again, today we're going to be getting more failure to deliver data for the rest of the first half of May. I don't expect there to be as much since the stock started rallying around May 16th, but it'll also be pretty interesting because that'll basically tell us what will be due within the next 2 weeks from now. Here you guys can see short seller gains and losses over the past year or so, and there was one other time right here where there was a pretty significant amount of short seller losses. You can see that at the end of March and into April, short sellers were going up on their money, but with the recent news announcement, short sellers have been losing money hand over fist each and every single day. And this is the most amount of money that short sellers have ever lost on this stock. And honestly, because of the very large increase in short interest in the month of March, short sellers are probably net down on their money on this stock, which puts even more pressure on them to close their positions, especially with bullish fundamental news coming out. Trust me when I say this, short sellers don't just close their positions because retail is trying to squeeze them. Look at RDBX. Short sellers are not closing their positions. Why would a short seller close their position? It's because of bullish fundamental news. That's why they even entered their short position in the first place. That's exactly why they're going to close them. And that's exactly why I think they will close them here on TRKA with 300% revenue growth, a new C-suite, and now they are getting to the point where they are down on their money. They've got warrants that are priced at $2, over 100% of the share price at the current time. We've seen loads of institutions load up in the month of May, as well as insiders accumulate in April. This thing is set up like an absolute dime. We're in a Wyckoff pattern right now, retesting the 102 fib level right here. It's gonna be great. It's gonna be awesome. I hope you guys have enjoyed the video. We're gonna engage indoor sunglasses one more time. Indoor sunglasses, engage. Drop a like on it if you guys did enjoy it. We did initially alert this one at 38 cents a few weeks ago. It ran over 200% since that. So if you wanted to join Hootmoney trade alerts, we are always alerting things over there as well. That will be the first link in the description or pinned comment section. And if you guys wanted to check out Moomoo, you can deposit $100, get up to $5,000 in free stock, as well as a free share of Lucid, currently going for about $20 per share, giving you an instant 20% return on your money. That's the second link in the description and pinned comment section. That's all I got, my friends. TRKA to freaking infinity. Let's go.